Hello, everyone, and welcome to another session of Opto. And I have the great pleasure of introducing Christian Magoon today, CEO at Amplify ETFs. How are you doing today, Christian?
Hey, it's great to be with you, Ed, and I'm doing well. We're going back to school here in the U.S. Here in mid-August, so kind of the start to the back half of the year has commenced.
Well, we're here today to talk about fintech and the fintech revolution. So I thought we could just start, broadly speaking, how do you define the fintech industry?
Yeah, well, it's an evolving industry for sure, right? So, in the early days, it was simply using computers, which was kind of revolutionary in banking and payments and investing. A lot of that used to be done by hand and by book or on paper. And that really kind of started the fintech revolution. And then it's kind of merged into, new fields now where we're seeing the digitization of a variety of different industries, whether it's investing, being able to open a brokerage account on your phone to buy and sell stocks or bonds on your phone, banking to do transfers. I mean, when's the last time many of the listeners actually stepped foot physically in a bank? It's really changed based off the technology that's out there. And, we're seeing it evolve even more now with machine learning and artificial intelligence. And this is really just kind of the financial services realm, embracing technology and becoming more and more digital. And probably the biggest, I would say, inflection point for that has been the smartphone. The computer initially was, but now smartphone has taken over, where we do so many transactions, over that smartphone. And more people in the world have smartphones than bank accounts. So that is kind of the vessel that fintech flows through. And it's only getting to be more kind of inclusive, not only here in the US, but around the world. And that's really why we're focused on this unique market segment. And
do you include digital assets in that, or is that,
Absolutely. So, all forms of kind of financial assets or transactions really fit into these buckets. So, digital assets, cryptocurrency, and even some of the digital offerings that, whether it's stable coins or even, we think in the future, some of the bond type transactions will be done through kind of a digital asset realm. And we've seen several central banks do that. So, this kind of realm is everything from companies that are providing services through financial technology to companies that are writing the software that backs it, companies that are helping to encode and secure these transactions. So it's a really robust area when you start to think of everything that touches you from a financial standpoint, being kind of put on your smartphone and being digitized. And we're only at the beginning of it because now, the tool set is there, but the next iteration is going to be what AI and machine learning do to these categories, which I think will kind of transcend just being a tool and instead actually offer you smart advice, let's just say, or recommendations or optimizing some of your whether it's your bank accounts or how you are investing or spending your money. So pretty exciting field to have exposure to. And we think this is a market segment that could be as revolutionary as the internet is in general to people's financial lives.
Yeah, I mean, it's moved a long way if you consider 20 years ago, it's changed so much. You have new companies, mobile app, you couldn't manage your finances on mobile apps or anything like this. This was the nascent days of mobile phones really as well, wasn't it? So it has moved forward dramatically. And, I believe you're right that there's a lot more to go, especially as, it's like the demographics change and you're getting a younger demographic that's used to, they've been brought up with smartphones, right? It's like their go-to device. I think we'll see more and more of this. At Amplify, you believe it's an opportune time to not just be thinking about fintech, but emerging market fintech in particular. So why do you think that?
Yeah, so we're in the West, right? So, we've had computers and widespread smartphones for many years. I think we take it for granted. There's unbelievable saturation there. At the same time, we're a heavily banked country, or series of countries in the West, where, it's unusual to hear somebody doesn't have a bank account or doesn't have a credit card or only uses cash. So there is a certain amount of progress and upside that can happen in the West with fintech. But we think the bigger opportunity and kind of the sweet spot is the 85% of the world's population that's in emerging markets. This is China, this is India, where they really skipped a lot of the technological steps that we went through in the West and really went straight to smartphones and are heavily reliant on smartphones. At the same time, historically, many of these emerging market economies haven't had the wealth over time, and thus you haven't seen many of these countries be very banked, meaning more people have smartphones there than actually have bank accounts. There's a huge amount of unbanked people in these countries. So, for example, China has 200 million of unbanked people. India, 100 million of unbanked people. When you look at that segment, you actually find out the majority, more than 80% of those unbanked people have a smartphone. So the opportunity here for fintech, we think, is amazing when it comes to emerging markets because they have the technology and they're progressing in terms of standard of living to, that emerging market consumer is having a higher standard of living. They're now having the ability to access smartphones. They now have more cash in their pocket, so to speak. And now kind of the easiest path for them is to use fintech apps on their phone to pay for goods and services, to apply for loans, to invest money. This is really the lifeblood of this huge population center. Again, 85% of the world's population in emerging markets. So at Amplify, we focused on the emerging market stocks that are part of fintech. That's very unique in the U.S. industry. There's a variety of just general fintech ETFs that have maybe some minor exposure to emerging markets. This is the whole other side, which is 100% emerging market stocks in the fintech space, diversified across a variety of industries that we'll talk about. And we think that's the sweet spot in the long term to really grab the kind of greenfield growth opportunity that fintech represents. And hey, just as an aside, not only this may be kind of we think the best area for long-term growth, you're also serving a population that is in need of these services. And I think there's a certain social aspect or impact aspect to that if you're concerned about that. If you're not, no worries. We still think the growth is going to be there because of demographics, because of their embrace of technology, because of the kind of the increase of wealth in emerging markets, the new emerging market consumer. So we're excited about that area and feel like we have a very unique fund that, to my knowledge, doesn't exist anywhere in the world.
Yeah. And are we talking about primarily China and India, or are there other countries outside that you think has good potential as well?
Yeah, there's close to 20 countries that we're looking at across the fund's selection universe. So it isn't just China and India, but because they have such large populations, they're great talking points. In our fund, which is Amplify Emerging Market Fintech ETF, we do have country caps, so we can't be more than 25% exposed to an individual country. So you think of many of the other countries that make up emerging markets, countries in Africa, for example, or other parts of Asia, Latin America. We have exposure really around the globe to these different types of fintech companies. And again, kind of exclusively emerging markets. Emerging markets certainly is an interesting area relative to, for example, just investing in developed markets, tends to be more volatile. But along with that volatility tends to come some of the upside over long periods of time, similar to kind of the relationship of large cap stocks looking at versus small cap stocks, where you see more volatility in small cap stocks, but over the long term you've seen outsized returns or alpha driven from those smaller cap companies, and that's in return for being able to stomach higher volatility.
Yes, the price you pay for innovation is the volatility, isn't it?
That's right.
Could you go through the main growth drivers you think for these emerging market economies? You've discussed The fact that a large amount of them don't have bank accounts. So that's one aspect. What other aspects are there?
Yeah, so from a demographic standpoint, there's a few you can touch on. They have a very young population on average, which is much more tech savvy. Many of these younger populations have grown up only knowing using a smartphone, whereas the West, that's not so much the case. Many of us maybe grew up using a computer and then ended up using a smartphone, and certainly a lot of the wealth in the West is in the older generation. In the U.S., the baby boomers, which may know their way around a computer a bit, but maybe are challenged to do financial transactions on a smartphone. So the youth and the tech savvy nature of these emerging markets is big. Also, if you look at the governments of these emerging markets, they definitely want to see their citizenry increase in terms of their affinity towards investing and banking. It doesn't benefit these governments to have a cash society, which is what most of these countries previously had prior to fintech, where everything was done in cash. It's hard to account for. It definitely creates a lot of issues, including potentially corruption. Whereas, using fintech, payment apps, WhatsApp, for example, is used quite a bit in China to pay for goods and services. That allows for a lot more visibility and legitimacy around around financial transactions. Yeah. So, government support of this is important too in these countries. And then, as you mentioned, historically, these countries are ripe for innovation in the sense that they generally have seen an increased standard of living dramatically over the last 10 years. Whether it's countries like China or India as kind of poster children for doing more Western manufacturing, even doing some outsourced work from a servicing standpoint. That's increased the standard of living dramatically. So many people in these countries have gone from maybe not having the luxury of investing or opening a bank account or having the ability to apply for a loan to now having a high enough standard of living that they're starting to think about these things and are able to do these things. So it's a variety of factors that really, I think, are quite interesting that lead us to emerging markets. And then the last kind of factor I would say is fintech is just, racing forward. It's no longer just a tool. There's advice, there's suggestions, there's optimization through artificial intelligence and machine learning, where, these companies with payment apps or investment apps or lending apps are able to do things much quicker than physically going in and, for example, getting a loan. There's some of these lending apps that may give you a decision on a loan within 2 hours after you submit to the app. And some of us can remember the days that you might have to wait a week or two to hear back from a bank for credit. These apps also allow for microloans, which didn't really exist in traditional finance. And that's a big deal in emerging markets, as there are many small businesses that are trying to just get, funding to pay for a food cart or a delivery vehicle. So quite interesting area. I think it's a great demographic meeting just a technology and use case that only is becoming more compelling. And when those two collide, we think the best opportunity, again, is emerging markets, fintech.
And in terms of the types of companies, specifically from emerging market fintech, what sort of types of companies are we seeing?
Yeah, so we look at kind of 6 categories across the portfolio in the ETF, which is EMFQ, emerging market fintech. So payment companies are a big allocation in the portfolio. Actually, there's a lot of payment companies. There's definitely been kind of a leading edge application for fintech on being able to pay seamlessly. We take for granted being able to maybe use American Express or a Visa or a MasterCard in the US. That's not really the case, overseas. So many of these payment
Are these the
apps.
same companies, Christian, or
Yeah, these are
Square,
versions.
things like this, or are they different?
Yeah, so they're different. These aren't the Visas and the MasterCards or the American Expresses. They're generally more digital focused than card focused. So these are really the payment pipelines, the payment apps. So the payment app where you be able to pay somebody $5 for maybe a ride in Thailand to and from work. You can pay them right on a financial fintech app that then processes it in the through its software and through the payment, whether it's their own payment pipeline or another company's payment pipeline, and then ultimately flows through to a bank. So it's not only sometimes the apps; it's the underlying pipelines there that allow for digital payments. And most commerce is generally trending more and more towards that in the fintech area, simply because they kind of made the leap from cash, not to checks, but from cash to digital payments.
Yeah.
The other side is banking. Many of the fintech companies now are able to reach these unbanked populations because they're available on a smartphone, and you don't have to set foot in a bank. You can have your digital ID and set up payment details through your phone, and having that bank account is important because it gives you a credit history. There was a time that many of these people in these countries just didn't have the luxury of that because of their standard of living. Now they do. It's quick, easy, and efficient, and that's often used as a source of payment for these payment transactions. The other side is a little bit different, which is lending and credit. And we talked a little bit about microloans and traditional loans being done simply via your smartphone. In previous iterations, you may go to somebody in your neighborhood or a person in your city who is known to lend out money, and it was recorded in their ledger. Today this can be done, through a national organization or even a global organization on your smartphone in an emerging market country, which has increased the opportunity. It's reduced the interest rate and allowed for not only larger loans, but also smaller micro loans, which is super important in those economies. The other side is insurance, and you can also, obtain insurance, whether that's business insurance or personal insurance now through these apps. So there's insurance companies that are included in the portfolio. Kind of corresponding to that are probably one of the more popular areas, investment and trading companies. So you can trade stocks and bonds and crypto and many of these emerging markets, and that was almost unattainable in some of these countries before, unless you had a bank account and unless you knew the right people. Now simply you have a smartphone and you have a source of funds. You can provide ID, you're up and trading all these types of different assets that you may never have had even access to in some of these countries. Finally, digital assets is included kind of in that realm, and the ability to custody digital assets, trade digital assets, stake digital assets. That's part of it. So really there's 6 categories we look at, just to summarize: payments, banking, lending and credit, insurance, investments and trading, and then digital assets. So those are the 6 categories that the EMFQ portfolio falls into. And essentially this is an index-based portfolio that looks at companies in these categories in the emerging market countries that we're able to custody assets in, and then companies with 50% or more of their revenue from these types of business activities end up getting included in the portfolio. And then, as we mentioned before, no country can be more than 25% of the portfolio. The portfolio gets rebalanced on a quarterly basis. So, we're trying to stay away from taking big bets on certain countries. So you probably could have half or more of your portfolio exposed to China, for example, because of their massive, amount of population and
Yeah.
industry. But again, we don't want this to be a China-specific portfolio. It's inclusive of China, but we also want to include many of the other interesting emerging market countries out there. And we can talk a little bit about later, kind of the country breakdown, et cetera, of the portfolio.
And 6 very interesting themes or sub-themes that you've described there. Is there one in particular that if you had to choose, gun to your head, do you think is the most promising over the next 5 to 10 years?
Yeah. So I think I would say there's 2, Ed. So in terms of fintech becoming more of a utility, like we would think of, water and electricity, that definitely is the payments area. I think that is only going to grow and continue to grow at a slow basis because these countries are going away from doing cash transactions for a variety of reasons, and the government is pushing that in many of these countries.
It's still largely cash-based, is it? Sorry to interrupt, but right now, today, I mean, it's going to be way over 50% is still cash, is it?
That's right. So you look at countries like, just off the top of my head, China, India, Mexico, who have traditionally been very cash focused.
Yeah.
From a government standpoint, are pushing to be less and less, cash oriented. And one of the big problems in many of these countries is what cash does in terms of corruption, because it's not very traceable. And also, it's hard for the government to keep track of. Now, there are some negative sides to having a cashless society. Certainly, depending on what the government's political standpoint is, it could be used to monitor and control people. So we know that's the case. But by and large, transforming kind of unbanked people into being banked and being able to pay through their phone, to not have to go, for example, to the post office, get a loan, go buy your groceries with that post office loan, and then turn around maybe the next week and go to the post office and repay the loan. Instead, doing that all on your smartphone is a big kind of change in quality of life and efficiency. That'd be just a one example of how that might work. So I think the payment side is going to be kind of the steady Eddie, the foundation. But in terms of the upside, I really think the kind of the investment trading area, and you could probably put digital assets in there, is going to be huge. I mean, we all know what access to capital markets does for us as individuals in terms of trying to pursue our financial goals. And we know that when we have, additional income that goes beyond what we need to pay for food and housing, and we're looking long term, a lot of that, income ends up going into investments to, essentially grow for the future. And because of the increased overall standard of living of consumers in these countries, I think the flows are going to be enormous. And there's going to be, like the U.S., a big wealth transfer happening over the next, 10 to 20 years. And as much as, we see it here in the U.S. with baby boomers and the World War II generation, overseas, many of these countries, the older generation, essentially may keep money at home, may keep money at a relative's house, do kind of safeguard it because they maybe don't have the tech savvy, and they may not trust, having their funds in institutions. And that's kind of different than the younger generation who has access to maybe institutions or financial institutions that maybe are not even based in their country. There may be regional kind of institutions or companies that seem to have a higher level of faith and trust, for example, than maybe the local bank in your small town in a province, et cetera. So I really think investments in trading is going to be kind of a massive growth area, especially as AI comes on the scene and kind of guides these new investors into certain types of investments or allocations. Because it's intimidating if you've never been on an investment app, you've never done any of this before, and you start it out, what are you going to do? Yeah, you may hear from your uncle or somebody that has done a little bit about this, but what if there's an AI assistant coming alongside you asking you for, what is your, risk tolerance and your time horizon, what are your goals, and then recommending investments. And I think that's where this is really going to kind of propel that investments and trading side into kind of the next sphere, because again, 85% of the world's population living in these countries, and their standard of living is growing faster than the West. Now they've started at a much lower level for sure, but it continues to be a very bullish story over the long term. And when standard of living increases, as we know, consumers move up the food chain in terms of what they're doing for their money. And as you get past kind of survival and comfort, you start to look at investing and for the future and saving for the future. So I'm really excited about the kind of the investment and trading area on the growth side, and then kind of the steadier, if you will, kind of march of the payment companies, because that's just the lifeblood of these economies.
Yep. And it's very interesting. You touched on the wealth transfer that everyone talks about for the Western world. You think the circumstances for that to happen are still the same in emerging markets as well? So that's that process is going to be going on over the next 10, 15 years.
Yeah, they certainly are there, and they definitely have a younger population, but that's not to forget that they do have an older population. Yeah. And some of these countries, the life expectancy isn't what you see in the U.S. So yeah, that wealth transfer happens. Anytime I think you move, a generation or two in terms of where wealth is at, that's very positive to innovation, and in this case, financial technology. So, I think of, my grandparents 2 generations ahead of me, and none of them are living now, but some recently were over the last 5 years, and they weren't even getting on a computer. And then I look at 1 generation ahead of me, which is my parents, and they're more apt to walk into a bank or deal with a insurance company face to face with an individual. And whereas now, from my standpoint, there's a lot I do online, and I think it's just that natural progression. Yeah. It's easier for us to do these things online. And as I think you and I didn't grow up, from day one with a smartphone or doing, financial transactions online when we were, first, on our own financially. That probably hit us, several years into our working life. And now it's very comfortable. And, I have a daughter, and I'm guessing that she, as the next generation, her first financial transaction likely will be, on a smartphone or some type of digital transaction from a application standpoint. So again, really bullish for the fintech segment in general. That's why there's a variety of funds in the industry that focus on that space. We've just taken a different approach and said, where do we think fintech really could grow and have explosive dynamics? And we think it's in this emerging market sphere. And that's why we're concentrated with EMFQ with 100% of the portfolio in that space.
Yeah. I had a question about more of a macro sort of question on the US dollar and its impact. On emerging markets, it's obviously very important to those markets. Where do you see us going forward from now? Obviously, after some very good strength in the US dollar, we had a bit of a sell-off over the last year or so, I suppose, and it's been stable over the last couple of months. Lots of there's people on both sides of them. It seems like it's very uncertain what's going to happen going forward. But from your perspective, what do you see happening?
I mean, in general, it's definitely a great question when you're looking at emerging markets, because the strength of the dollar, either a strong dollar hurts emerging markets and a weak dollar definitely helps it out. So that is a factor that is a risk, if you will, when you're investing in emerging markets, but that's part of the diversification you get in your portfolio by including emerging markets. Yeah. So, my personal opinion is I think the dollar is going to lose strength over the coming years. When you look at, the recent downgrade of the U.S. credit rating, you look at the political situation in the U.S., around kind of this debt ceiling. It's very contentious. and seems to be kind of a last minute decision every time that's based off political compromise that probably doesn't bode well for the strength of the dollar. In addition, there's so much debt that the United States has. One way to minimize that debt is to have a weaker dollar.
Yeah.
So there's incentive over the long term to kind of disinflate, if you will, the dollar, so it's easier to pay back those debts. So I think kind of the call it the longer term macro story on the dollar is likely weaker over the next, say, 3 to 5 years, which I think will help emerging market stocks. And, it's interesting, generally over the last 10 years, emerging markets haven't really produced a ton of alpha, if any, against U.S. markets, at least, or developed markets. That hasn't always been the case, right? There's been periods where we've seen strong outperformance by emerging markets. It's generally during a time when the dollar is weaker, or maybe U.S. valuations peak and emerging market valuations are just so low at that point that they become more attractive and just more of a value, so to speak. And I think both of those dynamics are in play right now. We've seen some recent outperformance of emerging markets last year versus the U.S. markets. EEM, the MSCI Emerging Markets Index and a related ETF had some outperformance last year versus the S&P 500, and we're seeing a decent return there this year. But this year we are seeing kind of S&P, I think, outperform emerging markets, and certainly it's, I think, on the back of a bit of more of a dollar strength. Also, let's not forget that emerging markets do have a fair amount of Chinese exposure, and the Chinese economy has kind of been stumbling a little bit, and even today, in the middle of August, we're hearing some concerns over some of their kind of banking system and some of the property transactions surrounding it, and even China going to ease rates to try to stimulate the economy a little bit more over there and increase GDP. So there is risk, certainly, when you're looking at emerging markets, that some of the largest weighted countries, China or India, have some unique risks or dynamics that can impact it. But overall, we think this is a great market to take a look at in terms of getting exposure to international in general, but also emerging markets. Just looking at the year-to-date return of MSCI Emerging Markets Index is up a little over 5%. And we're seeing EMFQ, our emerging market fintech ETF, return a little bit more than double that, up about 11.8% year to date. So we've seen some alpha there. I think that's a little bit based off investors becoming a little bit more comfortable with risk on this year. No question, fintech stocks are in the category of similar category of like NASDAQ 100 type stocks, risk on. So, during, financial crisis or risk off periods, growth stocks, including emerging market fintech and emerging markets in general, tend to not fare well. But during kind of markets that embrace taking risk, these types of investments tend to do well and have the potential to deliver some alpha. So being able to double the broad-based emerging market return year to date through mid-July has been a nice, kind of amount of wind in EMFQ sales in terms of, adding some alpha. And we'll see kind of what happens in the back half of the year with U.S. dollar strength. And then again, what's the appetite globally for taking on risk here, given kind of the wall of worry that seems to be, across the entire world, from China to Taiwan to Russia to Ukraine to even some of the political controversies that are happening here in the U.S. and the related kind of financial policy decisions that are occurring.
Mm-hmm. Yeah, definitely an interesting time at the moment. Let's dig into a few areas of the EMFQ, so Emerging Markets Fintech ETF. Just very briefly, what's the overall objective of the ETF?
Yeah, so the overall objective is to give investors broad-based exposure to emerging market fintech stocks EMFQ has 42 holdings, and when you look at the country allocations, we've got China, Brazil, Indonesia, Korea, Singapore, Hong Kong, Uruguay, Taiwan, and a variety of other countries. There's even a couple, if you check out our website, German listed companies in there. But of course, they're doing business, at least 50% of their revenue in emerging markets. So that's why you'll see Germany. In case any Germans are watching, no, Germany is not a considered emerging market country, but there are companies that have 50% or more of their revenue from emerging markets in the fintech space that are actually listed in Germany. So really what we're trying to do is give you an index rules-based approach to invest in this segment. It's very hard to pick one or two stocks to own in this space from a research standpoint, from an access standpoint. So the convenience of the ETF is that it tracks an index, the EQM, Emerging Market FinTech Index, that 4 times a year looks at all companies that qualify across about 20 countries. And the companies that qualify have to have a minimum market cap of, I think, right over 100 million, have minimum trading volume, and then have to have 50% or more of their revenue coming from one of these fintech segments that we talked about, whether it's lending and credit, banking, payments, investing and trading, etc. So you're getting a real broad-based kind of shotgun approach, if you will, to owning this segment. And it's a way to diversify your exposure to what we think will be ultimately the sweet spot of fintech, which is emerging market stocks.
Yeah, it's pretty interesting. Actually, another thing, a benefit of ETFs, which you get in this particular ETF, is there's just the easy exposure to other countries, which can be quite difficult, right? Like getting access to Taiwan stocks or even Chinese stocks is not the most straightforward thing for a lot of people, especially with the currency change and things like this. So it's there's a big benefit there if you're interested in this sort of more global exposure.
Yeah, that's right. I mean, there's certainly value. I think if you went out and tried to buy these 42 stocks in a variety of countries, it would likely cost you, I think, a multiple of our expense ratio. So our expense ratio is 69 basis points. So if you invest $100, you're going to pay, I guess, $6.90. I think if my math is correct, at 69 basis points, less than 1%. So I think the trading costs alone of being able to acquire even 50 shares or 100 shares of each one of these companies, assuming you'd actually be able to know what companies to purchase and do the research on your own. Of course, given the fact that it's an ETF, you could look at the AmplifyETFs.com website and see every one of these companies on a daily basis and the portfolio weighting to each one of these companies. So you could certainly replicate it, but I think it would be very hard to do for 69 basis points. On top of it, you have the tax efficiency of the ETF. So as the portfolio changes and rebalances 4 times a year, that's all done within kind of the tax efficiency of an ETF. So you don't have the impact that you would have if you did it on your own. You're able to really minimize, trading costs as well as tax liabilities, which we think is important because these are some dynamic companies that can move quite a bit in a short period of time. So not only is it important to rebalance the portfolio for risk control purposes, it's also important to rebalance and reassess the portfolio quarterly to be able to capture newly traded IPOs that come onto the market that qualify. So this is something where you can, own the portfolio and feel confident that 4 times a year there's going to be rebalancing and a reassessment of the actual amount of companies across these different countries that are investable, and that the ETF will be able to invest in this growing universe of companies.
Can you just touch on a few of the primary holdings in the ETF, maybe what theme they're in and why they're there?
Yeah. So, a couple, I'll maybe go through a couple categories. So on the investment and trading side, we have, XP, which is really focused in the Brazilian market, doing investment and trading kind of applications
Wow.
for Brazil, which is certainly a quite a important country. On the payment side, we have Network International, that deals with kind of loans, microloans, credit applications, and also has some payment capabilities. They're mostly focused in the Middle East and Africa. If you look at Mercado Libre, they have Mercado Pay, which is one of the largest payment companies in Latin America. A lot of Latin Americans using Mercado Libre and their kind of various payment applications to process things online and not have to worry about producing cash. We also have Alibaba, which certainly has Alipay as part of its underlying group of companies, which is a big deal for using the Alibaba platform to transact business on, but then also kind of make payments. We've got Ping, an insurance company, which is really pressed forward on doing more and more insurance through kind of the digital side. Kind of speaking more generally, when we look at our current allocation across kind of the different types of fintech stocks, our biggest allocation right now is to payment companies. They represent about 51% of the portfolio. And it's because payments are really the lifeblood of how you get to an investment and trading app, how you are able to receive lending and credit, how you transact as you buy on your phone, maybe online retail type goods and maybe services. So that's the largest category today. Kind of the next several largest are investment and trading companies at 11% of the portfolio, banking stocks at 11% of the portfolio, and then lending and credit at 11% of the portfolio. So when you think about it, these are kind of all bedrock industries. Yep. Call it the slow grower, the pipelines that are enabling fintech. And then you get into the smaller segments, which would be in currently investment real estate services, fintech software, digital assets, and wallets. And so quite a diverse portfolio. Just from a country perspective, as I kind of mentioned before, China and India are such large countries that they have many listed companies that fit into the fintech space. So about 22% of the portfolio is weighted to China. 19% is in Brazil. And you see India being part of kind of the other country section of the portfolio. Indonesia is 12% of the portfolio. Singapore has about 17% of the portfolio. And then you have countries like Taiwan, Uruguay, and even Hong Kong, which is kind of a quasi area to list Chinese companies. So quite a bit of diversification by countries. And you can tell kind of some of these largest countries do have some of the weight, again, with the top two countries currently being China and Brazil in the portfolio.
Yes, very interesting theme. So thank you for taking us through it today, Christian. Is there anything you'd like to say before we wrap it up? Maybe you could also just comment on where people can find out more information about the ETFs and maybe any information you release related to rebalancing, etc.
Sure. So, we think EMFQ is really one of a kind, that it does focus in on the long-term sweet spot of fintech from a demographic standpoint, and also think it could actually do some social good in these countries for the most part, serving the unbanked population. We have a variety of materials on our website. That's amplifyetfs.com. and you can simply click on the ticker EMFQ, and you'll see quarterly portfolio commentary on not only some of the news that happened in the emerging market fintech area, but also updates on some of the key holdings and the performance update. Of course, every day you can actually see every stock we hold in EMFQ on our website, as well as our country exposure, our market cap exposure, our exposure to the different 6 segments of fintech. It's all transparent for investors to see. We'd love for you to take a look at that. The portfolio does rebalance on a quarterly basis. So when we do a rebalance, that is updated. So we encourage you to check out our website. We have white papers, infographics, holdings, etc. available that are updated as frequently as daily, and other items that are updated month end or quarter end. So we want to be a resource there. And if you're interested in this space, I think we are the only fund company that I know of in the world that's offering this emerging market fintech ETF. Very convenient, we think, a reasonable cost, and a way for you to, over the long term, we think, capitalize in the fintech revolution in an area that has 85% of the world's population, that is the most unbanked in the world, but has a massive amount of smartphone penetration. So we think that's the bumper sticker reason to really consider EMFQ for investors' long-term growth portfolio.
That's great. Thanks, Christian.
It's great to be on again, and appreciate the time, Ed. Take care.